Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Yeah, Friday. It is Friday. End of the week. Hope everybody had an absolutely amazing trading day yesterday. Welcome everyone to the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you guys all had a productive week as we had election week. We had FOMC announcement. We had a whole bunch of things going on. We weren't here yesterday due to a live trading room that we had at TradersArmy.com. So some of the lines that I have on the charts are from there yesterday, and I will review a few of those as of today. Make sure if you are not already a subscriber, you click that subscribe button down below so that you get the updates as they become available. So let's go ahead and dive right in. So we're down a fair amount this morning in the S&P, and you know, Friday we've seen some fall off in our markets on Fridays. I'm not surprised at this. I think that I kind of expected a little bit of a rollover yesterday in our live room. We talked about a potential reversal long, and we got our little long move up to here, and then our position was closed out pretty quickly. Now, what this did though is it set up for a breakout to the downside, right? Because if you think about it, we've got a level that got hit once, hit a second time, base, and now we're continuing to fall. And I think there's room for price to continue to fall all the way down to, I think we could have a pretty bearish day. I think we could have a pretty strong down day today. So just be aware of that. Overall, our big picture had shifted to the upside, but that, looking at this 4-hour chart, our upside big picture wouldn't shift with a pullback into this region, right? We would still have higher swing highs and higher swing lows. And this is really my next turning point is on that 1-hour chart. So I think there's plenty of room today for price to fall. So don't overreact. If it does, you may want to get short on a reversal if price comes back in and gives you a potential reversal trade. That would be when you'd want to look for a short, and I'd be okay if somebody wants to short right now. I think there's ample opportunity, like I said, and ample room for price to continue to fall. If you don't short right now, wait for a rally back up in price. I think that what we're creating now, if price falls from here, does create a pretty good area where supply exceeds demand and a place that you can get short. Looking at the Nasdaq. So here we have the NQ level, and the NQ, we've got a couple of potential areas where price could keep falling to. Now we're down 1% in pre-market in the Nasdaq, so a little bit more than we are in the S&P. The Nasdaq is underperforming the S&P in general, and so you can anticipate price to continue to fall in the Nasdaq. We've got some areas here that could be potential stopping points, specifically off of our daily chart. Off of our hourly chart at the start of the day. This is right near the opening candlestick. So we're coming to a potential stopping point here. If we don't stop here, I think there's room for price to continue to fall. But that could be enough to get us a bounce back up into this area here, and really near the European market open. Right up in here was the European market open. So just keep an eye on what do we do off this bounce. For now, I think the S&P has a decent breakout opportunity, a little bit better than the Nasdaq's. Crude oil. So yesterday in crude, we had a breakdown. Our breakdown in crude was a pretty aggressive entry below this area here. Price moved down, hit target 1 pretty quickly, and then came down and hit target 2. So if you were in the live trading room yesterday, hopefully you were able to catch that really nice crude oil move as price did eventually come down and hit our target. Now, we're sitting at an area that traditionally could be a small time frame reversal point. And if we get a little reversal point off of that, great. But I think that if we do get a reversal point off of that, for now, with our big picture being as weak as it is, I think sets you up for a potential reversal here. Now, my problem with this is based on this candle's wick right here, it's already been tested, but it is still valid. Now, this was a midnight, setup in the time of day that's really tough sledding and hard to find good trades. So I'm actually going to go a bit lower. And if we get a bounce, I think it would just be up to about here before we'd get another chance at a reversal trade. So while we do have this thing set up here, I wouldn't take a long. I would look to take another short. Every short we've had for crude oil has worked this week, so there's no reason in changing out the plan. Gold. So let's take a look at gold. So in gold, we have a confirmation style entry set up from our trading room, and price came into the level, and we've gotten a little bounce out of it. However, my rule for those of you that are in our trading room is that if it doesn't really move the way I want it to move after 6 candles, I'm out. So in this case, I'm actually not interested in staying in this thing much longer. I think we could get a decent bounce out of it, especially with today's equity market weakness. However, I don't like the fact that we came into the level, traded halfway into it, traded just a little bit out of it, and are unable to do some, any more damage. So for now, I'm going to remove this area, and I'd be okay with closing that at a break even if you happen to join in on that trade. Looking at bonds, Aussie, Euro, Canadian. In the bonds, we're close to a potential entry off of our 15-minute level. The problem is I don't like the way that we're bouncing in front of it. The basing in front of the level makes for the level to be a significantly weaker opportunity. So what I'm going to do is remove this one. Actually, you know what I'm going to do is I'm going to change it to we already know that it was lower probability because it's on a 15-minute chart. I'm going to now make it a dashed line trade, which is just a little bit extra, added level of conservatism where we would wait for price to come in and we would get short as it comes back out. The Aussie. So in the Aussie, we were looking for an entry above 73.06. That was actually our entry was above 73.06. We didn't get above 73.06. We're still waiting. The level's still valid, so I'm going to hold this in play. I think, however, today that we could see a breakdown and go down even further. I mean, on the hourly chart, we've put in lower swing lows and lower swing highs. When I move to the 4-hour, we've not yet put in a lower swing low. But this is a classic double top pattern, right? Where we've got one top that's slightly higher than the other. So keep that in mind for today. I think you could see a further breakdown. I'm not going to get rid of this breakout long opportunity in the Aussie. I think it still could be very valid, but I think we could break down now below this area here. I've got a little bit of demand here, a little bit of buying opportunity here, but I think that level's been touched, creation, touched once, touched again, and we're basing in front of it. So this could be a good, nice move down. The Euro, the level that I'm going to look at is this one up here. This is probably the most obvious one for everyone to see, is this little bit of sideways basing. Let me zoom in on that. This little bit of sideways here, big move up, and then a strong move away. And that was right around the European close of yesterday. So let's see if that one holds any weight today. And then Canadian dollar. So in the Canadian dollar, we have a couple of areas well below us. When I move this to, say, the daily chart, you'll see that on the Canadian, we're sitting at, an area where it's been support in the past. We'll see if we get a little bit of a bounce off of this. This was ideally going to be a target for a short a while back. We'll see if we get a little bit of a bounce off of it to give us a chance for a re-entry. Right now, we don't have that. Great British Pound, Japanese Yen, last but certainly not least. So in the yen, we had a little breakdown short. Price came down, we got our breakdown, and then it's just kind of since then. So remember the 6 candle rule. If you took the short on this breakdown, you should still be at about a break-even point. I don't think it's going to work. I would shut it off at this point. So when you look at the trades from yesterday's trading room that met entry, the Japanese yen, gold, crude oil, and the S&P S&P and crude oil both met target. S&P met target 1, crude oil just about target 1. Closed it out at the end of the day just based on Globex. Crude oil met targets 1 and 2, and then gold and the yen both meh. They both met entry, but the prices just didn't go anywhere. And so if it doesn't go anywhere, I'm going to close it out because I don't want to take any undue levels of risk. Now, the other one that we had set up yesterday was copper. This copper area right up in here. I'm not sure if you did take the copper trade. Do me a favor, leave me a comment in the comment section down below because we had this copper level set up. Now this copper level came from, if you can see it on the 15-minute chart, you'll see that we had a lot of basing. Price came back into it. So we set the copper level up as a potential reversal with this little bit of sideways action in here. Price came in, nice little move, and we've gotten a nice little downward move out of there. So if you caught that one, leave me a comment in the comment section down below. It's always good to hear from you. So until tomorrow, actually no, tomorrow there is no room. It's our next live trading room is Sunday evening. If you're interested in joining the Traders Army live trading room, go to tradersarmy.com, get more details. We're building a nice little community over there, and hopefully you guys are interested in joining. And if you're not already a subscriber, then I will see you Monday for our next daily market commentary. Talk to you later.